A diversified portfolio is one that is allocated across stocks and bonds. And within each component of the stock portion of the portfolio and bond portfolio, you're invested across different securities to provide proper diversification across different sectors of both the stock and bond markets.
A diversified portfolio is one that's made to weather any storm and is really focused on what a client wants out of their portfolio. So what we do is we bring together several different types of asset classes. And the reason we do this is because you find that if you're overinvested into one and something negative were to happen, then you're going through a lot of loss of value of your assets.
Montag's portfolio managers are continuously evaluating the risk of our clients' portfolios versus the stock and bond markets. So turning to the stock market, we strive to have our clients invested across different sectors of the equity markets. So we'll have a certain percentage in technology stocks, as well as consumer staple stocks, which are much less volatile, consistent growth companies in the healthcare sector, industrials, et cetera, so that when technology has a big correction, your whole equity portfolio is not going down.
So the weight in your portfolio, if we're managing your money in any given sector, is not going to be the same from one quarter to the next or 1 year to the next because the opportunity is not the same. We review each sector every week. There's discussion about what makes this sector a good idea or a bad idea. And then we developed a research and individual stocks that we want to own as a result of those discussions. Diversification is important, but sometimes not owning an area of the market is also really important.
When people talk about diversification geographically, there's a lot of discussion about how much should you own in the United States versus developed markets or emerging markets, et cetera. And when you look under the hood at the US, at emerging markets, or at developed markets, which are heavily Western Europe, what you find is you're talking about sector exposures. We really try to look at it all to make sure we're not thinking we're diversified by owning emerging or developed outside the US when we're just sort of maybe overloading on a sector.
Oftentimes with diversification, what you'll find is financial advisors will tell you you need to own this type of stock, foreign stocks, domestic, US bonds, foreign bonds. At Montag, what makes us different is that the asset selection we choose is aimed at generating the type of return, type of income, type of growth that our client wants and our client needs. As a result, you don't see us blindly putting different asset classes together. What you find us doing is a much more tailored approach to the specific needs of a client.
At Montag, we don't manage to a model. We don't have a mandate that every account look the same. That's one of the things that we do well, and I think maybe makes us look a little bit different than some other firms that feel like they have to always be everywhere at the same time.